Bonds have turned negative for the first time ever. Japanese yields are going further into negative territory. Here's the question. Could the American bond market, Treasuries, turn negative down the road? Welcome to Trading Nation. I am Brian Sullivan. Dennis Davitt of Harvest Volatility Management. Max Wolff of Manhattan Venture Partners with us. Max, we're still at 1.6 on the 10-year. That's a long way away from where Germany is. You think it could happen at some point, though? Negative U.S. Treasury yields?
Yeah, so it's a good question. I think the JGBs and the Bunds have a slightly different dynamic than we have. So our bonds, by the way, have been negative a long time in a real sense, but not nominal. I don't see them going nominal negative, although I think they're going to stay real negative for a while in terms of inflation adjusted. And the reason being that Americans have more of a risk appetite than either Japanese or German investors, and folks come to the U.S. to put on risk to try to get returns. That's part of the reason we're seeing a little bit of a buoying here. The other reason we kind of expect this not to happen is there's going to be some rotation out of the U.S. when people want to take off risk or into these assets, and that's not going to mean as much negative likelihood on a real basis for the U.S. 10-year note sovereign.
Yeah, you also have to have a lot of buyers, and Max, everybody I talk to thinks that the European Central Bank is basically buying its own debt back, or the debt of countries, and so it's got this artificial buyer, and that the yield is not necessarily a reflection of pure market conditions. How do you feel about that?
Yeah, absolutely, and Bank of Japan isn't doing anything different, right? So all these are policy rates, but I mean, just to be fair, the U.S. rates have been policy-driven in no small part too, but point taken, less so than we're seeing from the ECB or the BOJ, so agreed.
Okay, so Dennis, we had a guest on Power Lunch today basically suggesting that the yield on the 10-year, and he's been right, by the way, could go below 1%, maybe not to negative, but below 1%. Are you seeing anything that would indicate that level of low yield?
Yeah, and I'll take it even a step further. I think you could see negative rates in the U.S. If Germany and other countries in the world go even further negative, it turns into a number line game. So where zero lies on the number line, who knows? One of the things that's structural about this that a lot of people don't realize is we can talk about the governments buying all these bonds and theorize that they're doing it, but we can look to fact. The European banks, under new regulations, their Basel regulations, much like our Dodd-Frank, are forced to hold a certain amount of assets on their balance sheet. Those assets have to be government-issued debt. So the government-issued debt, they're forced to own those assets because they're too big to fail, or their version of too big to fail. So there's a buyer in the marketplace. Every time a bank has to do a secondary offering to beat a stress test and they take money in, what do they do with the money? Where can they put it? They can't loan it out. They have to keep it on campus. So one of the things they can buy are, government debt, which, continues to drive that price lower. So the regulation on top of the policy is driving rates to where they are now.
All right. Well, listen, guys, interesting points of view there. And we're watching both these bond markets. It's funny because I got people at Note never talk about the bond market to me coming up and saying, well, did you see the bond yields on Germany? It's actually starting to get in sort of the mainstream consciousness now, guys. Dennis and Max, thank you both very much. Certainly not the last discussion we will have on that, folks. Thank you for tuning into Trading Nation. I'm Brian Sullivan. Until next time.